Now, those levels are much lower than they were previously to September and October of 2022. At the same time, we're now in a rhythm where the market understands this is where it sits until conditions improve. Hey everyone, welcome back to another edition of Super Prime UK with your MJ Group Super Prime valuers, myself, Rob Cohen.
Myself, James Wild.
Welcome back everyone. I've had a little bit of a gap. I've been away travelling. We're now here with the show live again to provide you with all of the latest updates and insights as we head into a deep UK winter. The clocks have changed. The weather has definitely changed. Storms are on the horizon and have been, and we are here to reflect on everything property, finance, and UK economics and lending. James, how have you been, and what have you got for us for today's show?
Yeah, no, I've been really good, thanks, Rob. I feel like on the ground the market is ticking over. I feel like we're actually quite busy as a firm. There's a lot of valuation work out there compared with some of the quieter months earlier in the year. That said, in terms of some of the live data we're seeing, 99 sales in the last week, which is a little bit significant actually. It's the first time since April 23 that we've dipped below the threshold of 100 sales per week. So maybe just a little bit less activity as we move through the autumn into the winter months there. However, new instructions, Rob, remain pretty strong. Those weeks at the mid to end of September through to October are extremely strong in terms of new instructions. Historically and seasonally, that is a very popular time to list properties on the market. So I think no surprise there. There's a little bit of a seasonal element there, but obviously the stock is needed to achieve those sales and transactions and under offers, which under offers 223 this week, Rob. So pretty strong there. So there is a pipeline for the sales to come through. So we'll just have to see if that's a little blip in the data this week, just a slightly quieter week, and I think there'll hopefully be some busier weeks as we move through into December.
I think the trend of 2023 and the industry is what's performing is specialist areas of lending and finance, and we as a business have seen that specialist expertise area grow as 2023 nears to an end, and I think that's probably the way forward. Specialisms and expertise outperforming vanilla mainstream work, and so if there's been a slowdown in mainstream lending, there's definitely been an uptick in the specialist areas like super prime UK itself, and I think that's a trend that will get stronger and stronger in 2024.
That's it, Rob. And just in addition there, around 2.5 sales per week there in terms of the 10 million plus super prime residential sales. So that market very much is still performing, Rob. The remainder of the UK market, some positivity this month. In terms of the Halifax data, it's the first positive month of monthly growth we've had in the last 6. So that sort of tells the story of the remainder of the market. And against the more central London and particularly the prime market space.
Continuing on the theme of specialisms and expertise, went to a great conference last week for the Association of Short-Term Lenders. I know many of you are watchers and listeners, so great session there, and actually that's a really buoyant space and a performing space in 2023, an area that we're experts in and have a huge client base on. And I just again want to re-emphasize that there are areas that are performing extremely well, and the short-term lending space, for obvious reasons, is one of those, because in uncertain and volatile markets you don't want to commit to a long-term lending agreement at maybe very high rates, so you go short-term for anything between 6 and 24 months, and thus that market's performing extremely well. So I think that's a real key indicator in the market.
Thanks, Rob. And just further to that, in terms of specialist lending, seeing a lot of HMOs and multi-unit freehold blocks, and on a slightly larger scale than that, there's the build-to-rent market as well, and those purpose-built flats for rental, which is definitely an emerging space and something which is being very established in the real estate marketplace. In addition to that, the southeast of England continues to see the largest decline in terms of the annual average house prices there, which just highlights, Rob, if we look back earlier in the year, the state of flux which the market was in, particularly in the southeast and London. So that data is going to be slightly more skewed there based on where we were sort of 6-9 months ago.
Yeah, I mean, looking back over the past 12 months, the market in terms of volume of transaction collapsed little over a year ago, and it's taken that long for us to get back to some kind of sustainable levels of transaction and lending levels. Now, those levels are much lower than they were previously to September and October of 2022. At the same time, we're now in a rhythm where the market understands this is where it sits until conditions improve.
That's it. And obviously, economically, Rob, we had interest rates were held again. So I think that's some positive news there. Inflation at 6.7%. So just waiting for that to reduce really is very, very sort of stubbornly high in the UK, which we've seen for the last 12 months or so.
Yeah, I had a really good session last week with some of the advisors to the Bank of England's monetary policy and many of the product and pricing experts for the leading major lenders in the UK. And actually, it was really positive in the sense that all of those experts and indicators are suggesting that in Q3, Q4 of 2024, if the current trend of fiscal policy continues, it is likely that there could be an interest rate decrease as a mechanism to increase transactions and increase lending and be pulled in because inflation is under control following the Bank of England's fiscal policy. So I think that's really positive following meetings that I had last week with advisors to the Bank of England's monetary policy and key influential players in the product and pricing of mortgage products for the major lenders in the UK.
Thanks, Rob. And just in terms of whilst we're on inflation, pay rises have outstripped inflation by the highest margin for around 2 years' time now. Around 7.7% versus the 6.7% on the inflation. So some positivity there. Wage growth and wage rises seems to have caught up somewhat in terms of that high inflation. In terms of the residential and commercial market, I was going to focus on just WeWork this week. Obviously, bankruptcy proceedings going through in America there. A former $47 billion company shrinking to market capitalization of around $50 million. Phenomenal fall from where they were in the market. Obviously, across Europe and the rest of the world, WeWork is still operating centres. How are they going to continue to trade, Rob?
Yeah, I think WeWork post home working and hybrid working is on one side a strong performer and a market indicator of the differences and changes in co-working. And so I think they will probably have quite a lot of performing offices. At the same time, because of their historical contracts and agreement on their leases, many of those units will not be performing because that expense far outweighs the income that those buildings are creating or receiving. And so I think the policy will be for WeWork is that the performing units will remain and continue, whether that's someone else buying it out, one of their competitors, or it being reclassified. And the ones that are not will be left to go. So I think the performing ones remain and everything else will unfortunately fall out.
That's it. Thanks, Rob. I mean, in terms of WeWork, they need to provide some sort of stability and certainty for the market and for businesses to want to be in their space and confident that WeWork will be in operation for a considerable duration of time. And they've got to do that to ensure that they boost their occupancy rates, which in some centres, like you say, the underperforming centres, that will be dwindling. However, the flexible office market space is one that is in demand, and certainly with modern needs and hybrid working, companies are moving in that direction. And whether it's their own space that they reconfigure with hot desking, their own facilities to account for more efficiency of their own office space, or whether they enter into serviced office space, such as what WeWork provide to the market. We're going to have to wait and see what their position will be outside of the US, and how they evolve and transform, whether how the brand will continue.
Yeah. International Week, James, coming up. What's your view on how the Premier League is looking so far?
Interesting in the last couple of weeks. There's been some teams down the bottom that have got huge results. Bournemouth, Nottingham Forest, up to sort of 14th, 15th in the table. That's bottom three is starting to cement itself, though. The Luton, Sheffield United, and Burnley just seem to struggling to barely get a point on the board.
And at the top?
At the top, well, Spurs have unravelled the last couple of weeks. I think largely because of injuries, to be honest, and red cards undoing of them. Chelsea, huge performance last weekend, 4-4 in the games of the season. They're down in 10th, though, so they need to try and build on that. Need to get Sterling firing, and certainly from goals, some striking positions. Got seem to have a new penalty taker there, and Man United, of course, they're still underwhelming, sort of scraping through the last of relatively easy fixtures.
So commentators are saying it's possibly a 3-horse race with City, Liverpool and Arsenal. Do you agree with that?
Definitely agree with that. I felt like with the Manchester City-Chelsea game that Chelsea played superbly, but City were only at 70%. So I think if City can find that extra gear, they will... I think they'll go on to clinch a 4th title in a row. But goals in that team, I don't think are going to be a problem with Haaland up front. He's just, each week that he plays, he looks like he's going to score 1-2 goals at least.
Yeah.
Arsenal, Liverpool, I'm not sure they quite have that attacking threat. Liverpool did have the best front three, I thought, a couple of years ago. And I think that's now restored to City.
Agreed. Thank you, everyone. We will be back with one more show before Christmas, and hopefully we can see out the year in a positive way with some good closing data, intel and market indicators. Everyone take care, look after yourself, and we will be back soon. Thanks, James.
Thanks, Rob. Thanks very much, everyone.